Good morning, everybody. Mike Vacchi, PrincetonTrader.com, here for NTMarkets.com with your Monday morning pre-market webcast. Okay, S&P 500 E-mini futures daily chart, and what we saw Friday was a rejection of the highs up at 62 off of the positive reaction from the jobs report, and we traded as far down as the 31 area. So, we haven't really seen a good old 30-handle rejection of a job high in some time. But there it was. So now we have to decide, is the 62 going to be a pronounced lower high versus 2088.75, or was Friday just a red day on the path back to new highs per usual for the bulls? So this week, the early part of this week, is going to help answer that question. And what we are seeing in the overnight is this. You saw the 50-day exponential moving average, which is currently 3112. Act as support on Friday. 3125 was the low. In the overnight tonight, we've got 32.5 as a low. So 3132 is setting itself up as a potential support area. That area is an absolute must-hold area for the bulls. Ideally, now that the bulls have jumped back above the middle band, the 20-day simple moving average, which is 2040.90, we've traded as high as 48.25 in the overnight, the bulls would want to hold the middle band and establish it as a support area. Here's a 15-minute chart of the overnight trade. You can see this is the 31 area that we tested Friday around noontime. We've retested this area in the overnight. Here's your 50-day exponential moving average, 3113. We've jumped back over 3637, which tried to be important late Sunday night. Made it over the middle band and traded as high as 48.25. We're coming back now, it seems, to test the middle band. The bulls are going to want that to hold. If it does hold and they make a higher high, then, as I said earlier, Friday looks more and more like an anomaly on the way back to new highs. However, if they lose middle band again, and if they subsequently lose the 3637 area, that sets up an almost certain test of 3132. A certain test of 3132 will establish one of two things. It'll either establish that 3132 is a very solid floor for the market, and we should bounce and probably not look back, because that's something that the dip buyers can really hang on to. A break of 3132 is going to most likely accelerate back to a test of last week's lows, maybe not all the way back to 84.5, but certainly back to 2020. So the next 1 to 2 sessions in the market, very important. All right, everybody have a fantastic day. Follow us on Twitter at Princeton Trader. Check out the website, PrincetonTrader.com. Come check out the chat room. I'll be back tomorrow morning with another webcast. Trade them well, everybody.